Alright guys, good afternoon. Let me drop another video for you guys to explain the use of indicators. You remember we are still treating, we are just done treating indicators, isn't it? So this is a black background. Let me just change my background to white. This is where I will go to settings, go to colors, background. I will choose white. Then I'm done. Yep, this is my chart. So you remember I made some explanations the other time using the moving averages. I added the moving average 7 and 4. I added 200 first to show us the main trend. Simple moving average 200 to show us the main trend. I added another moving average 89 to show us the short-term trend or trend correction. It shows us the short-term trend. Don't forget, it's a simple moving average. And let me give it color green or color black. Yeah. So the black is showing trend correction or the short-term trend. Again, I added 7, gave it color blue. Is it red now? Color red. Yeah, 3 pixel, and I'm done. And I added 14 and I gave it color blue. Yes, so that is that. So you can all see that, right? You can see what is happening. 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 So don't forget, I said we are going to take entries where we see the moving average 289 forms a golden cross. That's where we are going to take entries. We're going to take entries where we see a golden cross is formed. That's where we are going to take entry. Sorry, let me still reset my colors. Foreground should be black, and then grid should be white. Great. Yes, so this is what I'm talking about. Where the 289 forms a golden cross, it has, and then the moving averages bend towards the direction of the trend, upwards or downwards. It tells you the trend. So in this case, you can see the golden cross was formed and the moving averages were pointing upwards, telling us it's a buy trend. You see them. Now you check for entries where the moving average 7 and 14 also forms a golden cross. So look at what happened. This indicator, the moving average 7 and 14, has already formed a golden cross even before the main trend changed. So right from this point, we can see 7, that's the red, crossing the blue, which is the 14. And then market went up. So you will have taken your entry where you had a confirmation. That is, you have the main trend, which is a buy, and then entry is also a buy. You take your entries. Look at where you will have bought. You will have bought this market this long. So that is by the way. So let me still demonstrate the use of another moving average, exponential moving average, to show you how it can tell you the momentum of a market. So I'm adding the moving average period 2, exponential, apply to close, color yellow. Yeah, pixel 3. Let me leave it pixel 3. Now can you see this? Now we use this yellow moving average to know the momentum of the market. Remember, you are only trading the momentum of a higher time frame, and you are trading the trend of the lower time frames. So what do you do when you want to check the momentum of this currency per Euro USD? I go to the daily time frame. Let me on my data. I go to the daily time frame, and then look at what you do. When you come to the daily time frame, you check where price is. If price is below the yellow moving average, look at the yellow moving average, look at where price is. When I say price is, where price is currently is. Do you see where price is? Where that blue line is? So price is below that yellow moving average. So the momentum, the daily momentum is a sell. When price is above this yellow moving average, the momentum is a buy. Now listen to me again. I said if price is below this yellow moving average, I did not say if the candle. I said if price is below that yellow moving average, the momentum is a sell. If price is above it, the momentum is a buy. So by this point, the price is below it. So we know that the daily momentum is a buy. You want to have confirmations before you take an entry, you can go to 4-hour time frame and then you check what's happening on the 4-hour time frame. I don't know why my network is too poor today. So you go to the 4-hour time frame and then you check what is happening, what is the daily momentum on the 4-hour time frame. The momentum is still a sell. The momentum is what? A sell. So take a look at it. Momentum is a sell. Why? Because price is still below that moving average 2. So we know that the momentum is a sell. So that is that. We know that the daily momentum is a sell using that moving average. Now let me still add stochastic indicator to show you overbought and oversold regions. I think there are momentum indicators with the RSI and all of that. So what do? I click F, add, go to RSI. Where's RSI? Yes, oscillators. RSI, that's relative strength index, default. Let me just add line 50 plus 50. You see what I just did? 50, right? Let me just put black. Back. I'm done. So do you see what is happening? Now look at how you use the RSI. The RSI shows you overbought and oversold regions also. So the line 30 is the oversold region. Line 70 is overbought region. What it is telling is that once you see this indicator, this RSI, this line touching 70, it is telling you that this market has been buying for a long period of time, and at that point there is no too much momentum for a buy order. It is overbought. It is not saying that you cannot buy. What it is saying is that there is no much momentum for a buy order at that point, so you shouldn't buy. Are you getting me? Or even if you are buying, you should take short entries. Once you see that indicator touches line 30, it is telling you that this market has been selling for a while. There is no much momentum for a sell order. Now, once you see, you are not supposed to buy when the line is at 50. Once it is at 50, you wait or you take profit. So when are you supposed to buy? You are supposed to buy when the indicator is above 50 and sell when it is below 50. Let me show you a practical example. Let's go back and check where we found a buy order. As in this case, I think I showed you one. Okay, look at this point. We said at this point already market has been buying. The main trend is a buy, and then we wait for entry using the smaller moving averages. So we wanted to buy somewhere at this point. You wanted to buy. So you don't just buy, you check your RSI to see where market is. Now look at your RSI. Your RSI is below 50. Do you see that? Your RSI is below 50. So it's a good entry. Now, assuming your RSI is below that 50, can you see what happened here? At this point, the golden cross formed on the smaller moving averages, but our RSI is below 50. So it's not a good time for us to enter a buy order. So we wouldn't have entered a buy order using that relative strength index. Do you get? It gives you confirmation on entries. Now look at this. Main trend is a sell. The main trend is a sell, and then golden cross was formed on the smaller moving averages. Can you see where your RSI is? RSI is below 50. So you sell. Once it starts getting below 20, it is telling you this market has been selling for a while. The market may likely retrace or change its direction. Can you see what happened? Market now began to change direction. So that is that about the RSI. Let me briefly again demonstrate how you can use stochastic. Just add and then go and click on stochastic oscillator. I'm not going to modify anything. I'm just going to add down. So look at the stochastic indicator here. Okay, I think this is 533. Yep. So can you see what is happening here? This stochastic indicator, actually my stochastic indicator has been modified. The default setting is not 533. It should be 532. I think so. Or something like that. So, but anyhow, what you should know, okay, this is the default 533. What you should know that is that the line 80 is your overbought region, line 20 is your oversold region. So let's take a good example. Another example. Okay, look at this point where you have your main trend selling. Main trend was selling. Is that not? Golden cross was formed. Where is your stochastic? Our stochastic is supposed to be coming from an overbought region. So where would we have entered a sell order? Look at what happened. You will have entered a sell order where the stochastic is coming back and approaching the oversold region. Do you see that? If you are going to take a buy entry, you will have taken a buy entry where the stochastic, as in this case, main trend is a buy, and then on the smaller moving average, it has given us confirmation to buy also. And do you see your stochastic is already coming from an oversold region? So you will have bought this market also. Are we together? So that is that about these indicators. Just try and then put them to use. Let's see what happens next.